If you've been following NIO stock closely this week, then you already know, it's been anything but quiet. After a bruising start to the week, shares of the Chinese EV maker found some footing midweek, closing Thursday at $4.61, up about 2.44% on the day. But the real question now is, was that a dead cat bounce, or the start of something more meaningful? In today's video, we're going to set the stage for Friday's trading session, discuss the make or break levels that could shape NIO's short-term future, and look at how broader macro and sector dynamics are influencing investor sentiment. As always, we'll remain cautiously bullish while respecting the reality of recent price action. Let's jump in. We'll start with the technicals. Thursday's price move may not have blown anyone away, but it was significant in context. After 2 straight days of losses, Monday down 8%, Tuesday down 2%, Wednesday's bounce was a welcome change of pace. More importantly, it showed signs of stabilization. While volume was modest, the intraday price structure suggests that short-term buyers stepped back in near that $4.50 level, which we flagged previously as a soft support zone. Now, NIO hasn't exactly confirmed a breakout, but it also hasn't broken down. The stock remains range-bound in the $4.50 to $4.90 window, and a push above $4.90 on volume could be the green light many traders are waiting for. Why? Because that would signal a potential trend reversal after several sessions of lower highs. Keep your eye on that $4.90 to $5 zone. If we clear it on Friday, it could trigger some short covering and algorithmic momentum buying. If we reject it again, then we're likely still consolidating. Looking at the bigger picture, NIO's chart is battling a war between value seekers and growth skeptics. On one hand, you have long-term bulls pointing to the company's improving margin profile, growing battery swap infrastructure, and aggressive moves in Europe. On the other, you've got short-term traders and institutional players concerned about sluggish EV demand in China, geopolitical risk, and the company's inconsistent delivery numbers. And that last point is worth zooming in on. Earlier this week, we got NIO's July delivery data, and it wasn't exactly thrilling, down year-over-year, which rattled some bullish narratives. But the devil is in the details. July is historically a slower month for auto deliveries in China due to seasonality and factory downtime. While the numbers weren't pretty, they weren't catastrophic either. And remember, August is typically stronger, so there's a reasonable chance we'll see a rebound in next month's report. More broadly, NIO's long-term thesis hasn't changed. The company continues to invest heavily in software, autonomy, and battery innovation. And that might not be fully appreciated in the current share price. NIO is still trading at a price-to-sales ratio that reflects hyper-pessimism, especially when you compare it to US EV names like Rivian or Lucid. And while those companies might have stronger North American footprints, they don't necessarily have better fundamentals. Another bullish angle to watch is institutional sentiment. We've seen several hedge funds add to or re-enter positions in NIO in recent 13F filings. While we won't see the next round of filings until later this quarter, the presence of long-term capital quietly building positions, especially around or below the $5 mark, gives us a hint that smart money hasn't completely thrown in the towel. Then there's the macro picture. The Nasdaq and broader tech sector have been under some pressure this week as bond yields ticked up, but the overall trend in the market still leans bullish. If the S&P and Nasdaq can catch a bid heading into Friday, that tailwind could help NIO punch through some of the resistance that's been holding it back. And we can't ignore the policy angle. China has been steadily unveiling supportive measures to help its domestic economy, including targeted stimulus aimed at the consumer sector. If those policies begin to trickle into EV incentives or consumer credit expansion, it could be a meaningful catalyst for NIO in the weeks ahead. So what should we be watching for in Friday's session? First, volume. If NIO starts pushing higher in the first hour of trading but the volume is weak, be cautious. Low-volume pops often get faded by midday. But if we see real accumulation, especially from institutions, then Friday could be a turning point. Second, sentiment in the broader EV space. Tesla has been relatively stable this week, and if it starts to show signs of strength, that could spill over to Chinese names like NIO. Also keep an eye on XPeng and Li Auto. If all three move together, that usually means there's a sector-wide force at play, whether it's macro-related, policy-driven, or tied to a rebound in consumer sentiment. Third, technical levels. We've already mentioned that $4.90 to $5 range as key resistance, but don't forget about the downside either. If NIO breaks back below $4.50, That opens the door to $4.20, and nobody wants to see that heading into the weekend. Ultimately, this is a make-or-break moment for NIO, at least in the short term. After a bruising couple of sessions, the stock is trying to find its footing. If bulls can build on Thursday's bounce and push through the upper end of the recent range, that could restore confidence and momentum. But if we see another stall out or rejection at key levels, the consolidation might last a bit longer. Our view remains cautiously optimistic. While NIO has real challenges ahead, it also has a clear roadmap, improving operational metrics, and a compelling long-term vision. The market may not be pricing that in fully just yet, but at these levels, it doesn't need to. Even modest improvements in sentiment or delivery performance could drive outsized returns from here. So heading into Friday, stay nimble. Respect the chart, but don't lose sight of the fundamentals. NIO might not break out this week, but when it does, the move could be explosive. Thanks for watching, and make sure to hit that like and subscribe if you want to stay updated with our ongoing coverage.